Talk to me about the psychology of the markets. So this was an event that started in Turkey. It was a domestic event, and it's to do with the president, his economic thoughts, and of course the independence of the central bank, or in this case the non-independence. Then it became geopolitics. What is really freaking out the rest of the emerging markets?
So I think the real issue, I think you have the convergence of a couple of factors, and I do think it's important that this is, I think, more than about any single country. I think you've seen a deceleration in growth data in China, and not just in current data, but in a lot of measures that would reflect future expectations. So Chinese equity prices, Chinese bond yields, China's currency, copper prices, all of these things are saying something is really shifting. I think so that has the market's attention. The fact that the Fed has you've got strong data in the U.S. I think that has convinced more people that the Fed is going to keep hiking at a regular pace. And you're also entering kind of seasonally a difficult time for markets, right? A lot of people are out. Liquidity in August is always weaker seasonally wise. August and September tend to be two quite weak months for the market. So I think that also it just makes it a little bit easier for people to pull back, and that makes kind of price action like this a little bit easier to come by.
Andrew, we saw quite a big swing actually when it comes to Chinese offshore yuan. Again, does it mean that things are stabilizing somewhat with China? And you see, the market's doing one thing, and that I know has to do with regulation, but at the same time, you see the kind of diplomatic standoff that you mentioned possibly escalating.
Well, so look, it's a good sign that the two sides are talking to each other, or might appear to be resuming talking to each other, but I don't think this is a game changer. I don't think this is going to stop the trend. And in some ways, I think from the perspective of the U.S. administration, why would they change their strategy, right? The U.S. data is very strong. The U.S. equity market is very strong. You could look at that and say, this is all working. Well, I think the question is, until those things shift, I think you could forgive the administration for thinking our strategy is the right one. And you have other people telling us, well, this is dangerous and this is going to affect growth, but so far it hasn't. And so I guess we still think those trade tensions escalate until you see a larger market response.
For how much longer will the tax cut have an impact on U.S. GDP?
Well, so this is a very big debate among economists that gets far more granular than my expertise. But look, I think this is really explaining the divide in U.S. economic forecasts. Morgan Stanley's economists, we think a lot of the fiscal impulse, a lot of that tax cut benefit is actually kind of behind us now, and that will lead to U.S. growth decelerating. But there's been good analysis. There's a good study out of the Brookings Institution that suggests that there's a lot of fiscal impulse still to come. So look, there's very little precedent for kind of this much spending to be done this late in an economic cycle, and it's hard to model. But we think a lot of it's behind us.